Hello everybody, welcome to today's video. In today's video, we're going to go over how you can determine the direction in which the NFP will go before the fundamental is actually released. So, if that sounds interesting to you, please do stick with us until the end. Don't forget to subscribe, turn on that bell notification, and share with a few friends that you believe will find value in this video. Without further ado, let's dive right into it. So the platform that I use to actually do my fundamental analysis, it's called investing.com. It's a great platform that you can actually learn about fundamentals. They actually show you what's really going on all over the fundamentals. You can see here it just stated like Wall Street falls as recession fears rise after jobless claims data. So it's a great platform that you can actually use to actually know your fundamentals, right? But that's not what we're here today. We are here to learn about the NFP. Let's get it. So obviously you'll go to the economic calendar to actually see the fundamentals of the week. And I'll actually open here this week so that you can see the fundamentals of the week. Now, speaking about fundamentals, just like technicals, you can actually analyze them. So you can use previous market data to analyze what's going to happen next. Like for instance, in technicals, you know how everybody always draws like support, resistances, supply, demand, trend lines, order blocks, all those. Like you're just analyzing the previous data to predict what's going to happen next, right? So same thing applies with fundamentals. That there are reports that you can actually read that have been released that will actually give you a good prediction of what's really going to happen on the coming fundamentals. Now, the NFP is no different. The NFP, first and foremost, you need to know what's the NFP. So this is the NFP, the US Non-Farm Payroll. That's the long form of the NFP. It's the non-farm payroll. The non-farm payroll measures the change in numbers of people employed during the previous month, excluding the farming industry. That's why it's called non-farm, right? So it actually excludes the farming industry. So job creation is the furthermost indicator of consumer spending, which accounts for the majority of the economic activities, as we all know that. So a higher than expected reading is seen as a positive or bullish for the US dollar, while a lower than reading is taken as negative or bearish. That means if there are less payrolls, that will actually negatively impact the US dollar. If the readings come out positive, that means if there are more payrolls, then it will actually, positively impact the US dollar. So what are the fundamentals that you can actually look at to actually predict how the payrolls are going to come out? So there are a lot of fundamentals that you can actually do that, actually starting from interest rates, the GDP, the ADP, non-farm employment change, the employment report. There are a lot of fundamentals that you can actually go about. But there are two most fundamentals. I believe there are two very strong fundamentals that play a critical role in actually analyzing this market, or this fundamental that actually give a very strong indication of what's really going to happen, right? And all of them are actually released the week of the NFP. The first one is released on Wednesday, and it's called the ADP Non-Farm Employment Change. Now, what's the ADP Non-Farm Employment Change? The ADP National Employment Report is the measure of the monthly change in the non-farm private employment, right? Based on the payroll data of the approximately 400,000 business clients, the release is 2 days ahead of the government data. So this is for the private equity, right? Private employment. It's a good predictor of the government non-farm report, and the change is it's a good indication for the non-government payroll report, and the change is an indicator can be, very volatile. A higher than expected reading is taken as positive or bullish, while a lower than expected reading is taken as, negative. So this one is the first indication of what's really going to happen on the non-farm employment of the government, right? So this one is more of a private sector. But what's really going on here is because it's the same working conditions, it's the same things that affect the same market, because it's all of them based on the US dollar, in the United States. So the effects that actually happen, or the impacts that are actually on the private market, in the private sector, are most likely going to be the same with the government sector. So this is the strongest indication that you can look at to actually predict what's really going to happen on the non-farm payroll on Friday. The second one is the initial jobless claim. This one comes out on Thursday, right? So it's another great indication that indicates what's really going to happen on the non-farm payroll on Friday. So what do you really look at on these fundamentals? So obviously you need to look at the impact in the market. So for instance, here you see the non-farm employment change. It came out negative, leaving a negative impact on the US dollar. You can see it came out negative with negative 145K. And then the initial jobless claim came out negative 228K. That means over 228,000 people, lost their jobs. So that means this is negative for the US dollar. Now, if those many people lost their jobs, mind you, this is general. It includes both the farm sector and the non-farm sector, right? But in general, if people lose their jobs, obviously, it's most likely going to be a percentage of that comes from the non-farm sector. As you can see here, on Wednesday, it already indicated that people, where's that fundamental again? Here it is. Non-farm employment change came out negative for the private sector. And then the initial jobless claims came out again negative. So this is actually a great indication that the non-farm payroll on Friday for the government sector will actually also be negative. So here it is. It's 8:30 Eastern time for March. So those two are great indications of what's really going to happen on the non-farm payrolls on Friday, which is a negative impact, right? Because both of them actually indicate that the US dollar is losing it. The initial jobless claims, a lot of people are claiming to be jobless, and the ADP non-farm employment change is also negative, bearish for the US dollar. So what do you think is going to happen on the government side? Obviously, it's going to lean on this side because it has already shown these two great indications have already shown that there's a negative impact on the, on the jobs, right? So that means on Friday, it's most likely going to give us a negative impact. So these two are what I always look at on the week of the NFP to actually determine what's really going to happen. This week, tomorrow, obviously you are going to see probably the NFP come out negative, but on other weeks, you can actually see maybe this one, if it comes out positive, most likely the initial jobless claims are also going to come out positive. So that means if that does happen, if both of them actually come out positive, that means the non-farm payroll will also come out positive. So these two are actually what indicates what's going to happen on the non-farm payroll. If they came out negative, the fundamental or the non-farm payroll, the NFP will come out negative. If they come out positive, the NFP is most likely going to come out positive. So that's how you can actually determine how the NFP is going to play out prior to how it's going to play out. My analysis is that tomorrow the NFP will come out negative for the US dollar. So if you have a trade on the US dollar, and we know tomorrow is Good Friday, so if you have a trade on the US dollar that isn't against the US dollar, right? I probably tell you to sell, close out that trade, because you don't want to be caught out on the wrong side of the trade once the NFP hits. Most brokers tomorrow, I know they won't be really trading that much. If there are, it will be a very low volume day because most of the banks will actually be closed for Good Friday. But if you're already in a trade, go break even, because you don't want to get jinxed out in this BRICS thing. You never know what's going to happen on the weekend. So with that being said, guys, if you found value in this video, please give us a like, share with a few friends that you believe will find value in this video, subscribe, and turn on that bell notification, because I'll be dropping content like this, breaking down fundamentals and their anticipated impacts in the market, more of them in the future, and you don't want to miss that out. So turn on that bell notification, because you don't want to miss out that juicy content. Till next time, guys, I appreciate you all. Take it easy out there. That's content.